Hey everybody, Jonathan Cameron here, Certified Financial Planner with CameronDowning, a registered investment advisory firm in Miami, Florida. In this video, I'm going to talk a little bit about 403b retirement accounts. What are they? Who are they for? How do they work? How do they work for you? A 403b is sort of like a 401k retirement account for nonprofit or government employees. And there are many similarities. Who would have a 403b? If you're a firefighter, a law enforcement professional, a hospital employee perhaps, or someone who works in public education, you likely have a 403b retirement account. In short, 403b retirement accounts are designed for nonprofits, while 401ks are found in private for-profit companies. Your investment options are typically mutual funds or annuity contracts. If annuity contracts are the only investment choice, the plan is likely sponsored by an insurance company. These contracts are also known as TSAs, or tax sheltered annuities. Money can go into your account from two sources: deferrals from your paycheck and contributions from your employer. Now, what's a deferral? A deferral is money you choose to add to your retirement account instead of taking it as spendable cash in your paycheck. For your employer, contributions to employee retirement accounts can be purely discretionary or added according to a match formula that they have. For example, the employer may offer you 50 cents on the dollar of whatever you contribute, up to 6% of your earnings. Again, this is an example. Say you make 100,000. To keep the math easy, you defer 6,000 or 6%, and the employer matches you 3,000. Very important to defer right up to the maximum match, or you're leaving money on the table. Generally, a 403b is going to be driven by your deferrals rather than the employer kicking in. 403bs are sponsored by nonprofits, as I mentioned, so that's something to keep in mind. You may defer 100% of your salary if you are a participant in a 403b plan, up to a maximum of $18,000 per year. In addition, if you are age 50 or above, you may defer an additional $6,000. Now, what are the advantages to you? Number one, automatic savings. Money is taken out of your paycheck every pay cycle without you even thinking about it. Another big advantage to you is tax savings. As you defer money into the 403b, you are not taxed on it for federal income tax purposes. You do pay payroll taxes, that is FICA, F-I-C-A, but not federal income tax. What happens to the account at retirement? Over the years, it is going to grow without federal taxation. That's the idea, right? You're going to have compounding earnings. So the effect can be enormous. If you do it purposefully with a good, meaningful deferral over time, your employer throws in some money too, you can end up with a significantly sized account. You just need to be disciplined. It's a matter of deferred gratification. Think of it this way. Nobody ever said, I wish I had not saved so much money. That just doesn't happen. People don't say that. So invest in yourself. Now, what happens with the taxes at the other end, at retirement? So when you retire and you take money out, it will be taxable to you then at ordinary income tax rates. There's your trade-off. You're trading off the double benefit of tax deductibility and tax deferral now for ordinary income tax rates in the future. That's another topic which we cover in a different video. Now, some 403b plans may offer a Roth option, ROTH. In this option, you are deferring on an after-tax basis. So much like a Roth IRA, the account grows without taxation, it's tax deferred, and when it's time to retire, you can distribute your funds with no taxable event. Many taxpayers are phased out based on their income from contributing directly to a Roth IRA. However, with a Roth option in a 403b or a 401k account, there's no income phase out, nor is there a much lower 5,500 annual contribution limit. A Roth option should be considered carefully, as there is a little pain now in the loss of an immediate tax deduction, but a potentially huge gain in the long run. Deferrals into a Roth 403b account are with after-tax dollars, and while you pay some payroll taxes, this isn't a 403b Roth now, your retirement distributions are free of federal income tax. Let me say that again because this is very important. When you take the money out of a Roth 403b at the other end in retirement, it does not come out taxable. That's really something to consider, because if you have access to an account that approaches 7 figures or even exceeds $1 million in your retirement years without any income taxation, that is setting yourself up for a truly successful retirement. Now, this requires some foresight and planning on your end. By all means, get some professional advice on this. It's also worth noting that you won't have any required minimum distributions in Roth 403bs. It's an excellent retirement vehicle if you have it as an option. Now, how do you invest the money once it's there? The investment allocation you choose is a very important consideration for you. Your allocation should reflect how you feel about investing and what type of volatility you can take in the markets. If you are in the early stages of your working career and have a long time horizon ahead of you, we'll generally tell you this. Be willing to take strategic risks with your invested dollars. Markets will always have their ups and downs. That can work in your favor over time, especially when you are a consistent and disciplined investor. When you have down months in the market or down years even, you're inevitably buying in at bargain prices. When the market recovers, those dollars are the ones that will work for you the hardest. If you remember one thing from this video, it's this. Make sure you invest. In other words, defer up to the employer match. Otherwise, you're just leaving money on the table that you could have had in your account. So do yourself a favor, participate, get started, take your employer's match, let the time value of money work for you. Once again, this is Jonathan Cameron, Certified Financial Planner at CameronDowning. Please connect with us on LinkedIn and follow us on Facebook and Twitter. Check out our website, www.cameron-downing.com. There you'll find complete information on our pricing, and you can book an appointment to come see us. Thanks for watching, and see you next time.